everyone. We wanted to come to you today. It's been that kind of energy drink kind of week. I'm drinking a Jocko today, and she's got a Bloom. But it's just been one of those kind of weeks. So we're a little late this week getting this out, but hopefully we'll get it all edited. So I'm Kim.
I'm Jennifer.
Yep, and we're with American Realty here in Lake Jackson, and we want to talk to you today about the difference between owner financing and a lease-to-own. And there is a big difference between those two things, and so we want to make sure that you understand, because we do get a lot of phone calls about owner financing.
Absolutely. I think the biggest thing is we get asked quite a bit, is it the same? And the obvious answer, maybe it's not obvious, but the answer is no, it's not the same. When you are owner financing, it's a creative way. Instead of having a mortgage through a lender, it's a creative way to have a loan. It helps a lot of people who maybe have credit issues. It helps people that maybe they're self-employed. I'm trying to think what else. Just anything that it would be out of the normal black or white situation for a mortgage loan.
Well, and sometimes the seller wants to do that because they're wanting to hang on to that house also for income, because of course most of the time you pay a little bit of a higher interest rate when you're doing an owner finance, and the down payment will depend on what that owner wants at that time. Sometimes it can be more or less even than what you would normally pay with a lender.
Right.
But like Jennifer said, you're getting that house because maybe your credit score is not as strong as you need it to be to go out and do a traditional loan.
Right. One of the great things about the state that we live in, there are a lot of great things about Texas, but one of the great things is that when you are doing an owner finance situation, you're buying a home that way, you actually become the owner. The owner that is financing it is essentially the bank at that point. Mm-hmm. So you are the owner. You are going to be listed on the deed as the owner. The person that you're purchasing it from becomes the lien holder. So that's a really nice thing. Not all states do that. That is a Texas thing. We lend to people, and so therefore, even though the lien holder will be on title, what's great is that you will actually be the owner of the home. Mm-hmm. So it's not going to show Mr. Smith that you bought it from as the owner. It's going to show him as the lien holder, and it's going to show you as the owner.
Yes. And so also what you have to remember with owner finance is you also, at that point, you have your own insurance as far as not only the contents, which you have to have with the lease to own also, but the structure of the property. So if something happens to that property, now you are filing on your insurance, and the owner is the lien holder, so they have to sign for you to sign any kind of checks, just like if you were buying a house in a traditional way.
And another important fact is that you now are going to be responsible for the maintenance of that home. It is your home.
It is your house.
It is your home.
Yep.
It's no longer treated like a rental situation. It is your home. So the maintenance falls onto your lap.
Exactly. I think that's a good point to make.
Yes.
And also, now as far as like taxes and insurance, there is a possibility that owner could ask you to escrow that amount, meaning that they are going to hold your taxes and insurance into some sort of escrow account, and at the end of the year, they would end up paying your taxes, and when your insurance came due, they would do that. And mainly that is to protect the owner, because that way they don't take a chance of you not paying the taxes, and now they're in tax default as a lien holder.
Right, 100%. I guess the other part is that it's good to know is that everything's negotiable. Unlike when you're going through a actual true mortgage lender or a bank. Yes, there are room for negotiations on the terms. You can negotiate interest rate. You can buy that interest rate down. Negotiate is probably not the right word. You can buy that interest rate down. There's things that you can talk about and discuss. But for the most part, the bank holds the cards. The bank's the one that's going to decide what the terms are going to be. You can decide if you want a 15 or a 30 year or a 40 year now, or whatever the case may be. You can decide those terms. Yeah, whatever. You can decide those terms. But so much of it is really decided by the mortgage company and what you qualify for. When you're doing an owner finance situation, all those terms become negotiable. Now, with that being said, the person who's selling the property also still holds the cards, because they can determine what they actually want to view and see as the lender.
Right.
So
yeah, I've done some pretty creative owner finances in the past. We did one where they went to 5 years and then the note went up if they didn't pay it off, because they wanted to get that paid off. And then the whole loan came due in like 10 years. So there's lots of different, like Jennifer said, there's lots of negotiations and creative ways you can do that. Now, the other difference is that we can write a contract for a owner finance. However, when it comes down to the nitty gritty, I really prefer to turn it over to an attorney, because that way they can get all the paperwork ready, especially if it's very detailed.
Right.
We do have some seller financing addendums that we can fill out as realtors, but we're also not attorneys. So when it comes into all of that deep negotiations and changing things up, I would much rather go to just an attorney to have that done. And usually we have ones that we recommend that we've worked with before, or of course you're always free to hire your own attorney.
Yes, absolutely. So now, lease to own is very different. Kim, on a lease to own, what are you first?
You are the renter.
Yes. Yes.
You are the tenant.
Yes.
Yes,
correct.
you're the tenant. And you don't own that house. So now the repairs are going to fall back on the landlord, not you.
Yeah, so you're paying rent. Or typically in your option fee, you could still have an option fee because you can still do inspections, you can still do all that good stuff, but it's all going to be collected and it not necessarily going to be credited back to you at closing whenever you decide to purchase that property. That all determines on the owner. If they decide to set up like an account to where like your rents are going towards that account, and then whenever you go to purchase the home, they will take those monies and apply it to the actual.
And it may not be the full amount.
Right.
It may not be the full amount.
Right.
Those are, I will tell you that those are not real common. I've not seen those in the 20 years. One of the things that you have to be careful with, especially rent to own, is that you get something drawn up by an attorney, because we have had situations in the past where that landlord has not honored that lease to own because they did paperwork. And we have gotten people that have thought they were paying to buy this property, and at the end the landlord's saying, no, I'm selling it, I'm not doing this for you. Right. And so you want to make sure that you're crossing all your T's and dotting all of your I's when you do anything like that. And we see that a lot in investment properties, and you may not be going through a realtor, and unfortunately there's people out there that are not very scrupulous, and so you want to make sure that you're getting that all done with an attorney.
Absolutely. And I think a lot of times when you're seeing a rent-to-own situation, you as the renter become more invested in that property. So you have to be very mindful of that, because you don't want to get in assuming that the landlord is being 100% transparent. Mm-hmm. So you want to protect yourself. Texas is a landlord-friendly state.
Yes.
It leans towards landlords, not tenants. So that's something to keep in mind whenever you're going through the negotiations of that.
So with an owner finance, what happens if you don't pay?
If you stop paying on an owner finance, it's just like a mortgage. Yeah. They can actually foreclose on you.
Yeah.
So
if you don't pay, you don't stay.
Yep. You don't pay, you don't stay. If you're doing a rent to own, if you don't pay, you don't. Actually, when you're doing a rent to own, one of the things that it's sort of the same, if you will. If that landlord has agreed to put your rent in an account and put it towards the purchase of that property, if you fail to pay, they could actually keep those rents and not apply them to anything. So you would have been paying towards just renting like a regular situation.
And then they would actually have to go through an eviction process because it is a lease to own.
Yes.
So then they would go. So that's where the difference is. One's a foreclosure process and one's going to be an eviction process.
Yes. Typically, and Kim mentioned this, on an owner finance situation, most of the time they are going to be in a balloon situation. So we, especially we would like to absolutely offer credit services if it's about credit repair. We would offer roadmaps for that, because you want to be able to say, if it's a 5-year balloon that's due, that 5 years will come so fast.
It will come
and
very fast.
Yes, you can always renegotiate the terms, but that doesn't mean that the lien holder is willing to renegotiate. So you want to be prepared to be able to move on to those next steps, whatever those should be.
So would you recommend inspections for both lease to own and the owner finance?
Yes,
Okay.
absolutely.
Yes.
Absolutely. And on the owner finance, typically the negotiated would be if you do just like a regular purchase. So if you would have earnest money, you would have option money. So you have an option period. On a lease to own, you don't necessarily have those negotiations available.
Right.
So you could lose any kind of option money that you're putting towards. That's all going to be a part of whatever's negotiated on the contract.
And on your owner financing, now you can go back and discuss the repairs and work with that owner that you're buying it from to be able to do some of those repairs, because you don't want to owner finance a home and then get into something that's going to be very expensive, like structural repair or plumbing issues, AC issues, things like that.
So just to reiterate, owner financing might be perfect if A, you have a current seller who's willing to owner finance. And a lot of times it's not going to necessarily say that to us as agents. It's not going to just be right there. It's something we have to go and ask about, inquire about. And once I think a seller does their research, because there are tax benefits for a seller, and I'm by no means not a tax attorney, so I'm not going to go into all that, but I know there are tax benefits to doing owner finance if you are a seller. But I think that if it's something that you're looking at doing, you need to know that you need to have a down payment still. You need it because usually on an owner finance, they're going to request a very large down payment, and that's part of the negotiating, right? Like, we're willing to put our neck out, but you're going to put some skin in the game, and we mean skin in the game. So you need to be willing to have a down payment. So if you can afford the down payment, but you have to work on your credit, then that's something you need to do during that time period of that balloon, let's just say, of that loan. Understanding the legal documents. So, making sure an attorney's involved is the best bet. That's what we would suggest to anybody.
And I think that's what I tell everybody, that we have people on occasion call us and ask us about owner financing. And sometimes we can go into the multiple listing system and find that. But I also know those come a lot of times off market. And so you do want to protect yourself, because you don't want to be in a situation where you thought you owned the house and you don't. You thought you were renting to own and you don't. And then you're just in a mess.
Right. One thing we did not mention, which is really important, if a seller still has a mortgage on that property, that could be an issue. There are a lot of mortgage lenders who do not allow, they would basically look at that like a wraparound, if you will, and they will not allow that. So that would be something that you need to do your due diligence on as a buyer. That's where your agents are going to have to come into play, because you want to make sure you're checking on everything, because you would put yourself in trouble if you were the buyer and you were to get into a owner finance situation not knowing there was still a mortgage, and that lien holder were to get wind of that, if you will. It could be financially a lot of
detrimental.
Problems. Yeah, detrimental.
And we've actually come across these. They actually now are calling them subject to loans. Years ago, I bought a house on a wraparound. That was in the 80s, so that's been a few years back. What happens is, and sometimes, unfortunately, 10? I was 10. Sometimes, unfortunately, you may not even know it. We ran across a buyer recently that had, a buyer who had bought a house, and it was a subject to, and she didn't even realize it. So you want to make sure, like Jennifer said, that you're watching for those. And those are things that you can hire agents to for, because a lot of times those are in the MLS system. But those subject to loans are where the owner, like she said, the owner of the seller of the house has a mortgage, and they could call that. And now you're not in a good place. But if you have any other questions about owner financing, lease to own, we would love to be able to answer any of your questions even a little bit more deeply. Meet with you in the office.
That's right, because it all depends on where you stand financially and what you're looking to do. And the other part of it is when we're looking to find your dream home, whether or not that seller is willing or is able to do the owner finance as well. Right. So.
And it does help. I was young once and didn't have much of a down payment, so it really came in handy when the owner of Elm Court, which I bought here in Lake Jackson, she did a wraparound for us, and we did it. And so that was a $40,000 house, just for y'all's information. It wasn't even that much. That's the scary part.
So confusion can be expensive. So we want to try to help fill in the blanks and help answer any questions that we can, so that you don't have any costly mistakes.
So I hope you have a great weekend, and we have some more interviews and things coming up. So if you have something you want to hear, drop it in the comments. Have a great weekend.